Welcome to Inside India. I'm Amitoj Singh, right here in New Delhi, in the seat of power with the Finance Ministry, the old one, right behind me, and the Parliament in that direction. Joining me also from Singapore is my very esteemed colleague, JP Yong. Here are your headlines. India set to borrow a record 190 billion in its latest federal budget as it makes a big bet on manufacturing and tech as a means to boost growth. Traders not thrilled with the budget though. The Nifty 50 sinking during the special trading session yesterday as a hike in taxes on derivatives weighs on sentiment.
And you know who else is not thrilled either? The markets, because we're seeing a sell-off across all asset classes this morning. Most markets in the red, while oil, gold, and silver all plunge by over 3%. And a happy Monday morning to all of you, but not a happy Monday for most markets across Asia. Let's take a pulse check of how they're starting off their new trading week. You see most markets flashing a shade of red with risk-off sentiment very prevalent out here in Asia. The Kospi today plunging by more than 3.5% day session. And we're also seeing intraday losses or steep intraday losses in Hong Kong and also for the Shanghai Composite. The one standout so far today, and that is the Nikkei 225 in Japan, with some polls suggesting that the LDB will have a comfortable win once the elections get underway later on this weekend. And that's solidifying markets so far in today's session alongside a weaker or softer yen. Now, we've seen the yen firm up over the last couple of weeks. Today is a day where we're actually seeing it give back some of those gains and perhaps supporting also the Nikkei 225 and the topics in today's session. Now, we also want to take a look at how gold and silver are doing because these two precious metals were rallying for the better part of the last 12 months. Well, precious metals, better call them precarious instead, because we're seeing that the sell-off for gold and silver continues today. The precious metal gold down by about 3% and silver also plunging by almost 4% in today's session. And that also beckons perhaps just a quick look at how gold miners in Australia are reacting today. And that's also one of the reasons why we're also seeing perhaps some of these gold miners like Evolution Miner in Newmont out in Sydney, trading out in Sydney, that is, plunging by more than 5.3% and 7.1%, at least for Northern Star. You can see it there. The ASX All Gold Index also falling by 6.8%. It's one of the big reasons why we're actually seeing a bit of a drag on the ASX 200 in Sydney, but they are one of a number of major indices that are pulling back so far at the start of the Monday session. Now, we also want to take a look at another thing that's pulling back oil prices in Asia on the prospect of that de-escalation between the United States and Iran. Take a look at WTI falling and dropping by more than 4% in today's session. Brent crude also falling by almost 4%. $66.58 per barrel is where Brent crude futures are currently trading right now. Again, on the prospect of that de-escalation between the U.S. and Iran, which perhaps might assuage concerns, but we'll see a lot of oil prices give back some of their gains as the question on potential oversupply returns to the table for many who are trading in this commodity. U.S. President Donald Trump says he's, quote, seriously talking with Iran, downplaying the risk of a regional conflict after a recent buildup of its naval and air defense in the Middle East. Meanwhile, OPEC Plus has agreed to keep its oil output unchanged from March, as widely expected. The oil producer bloc did not give any forward guidance and policy beyond that of March. U.S. President Donald Trump also says India has agreed in principle to buy Venezuelan oil, helping replace some of the Russian crude New Delhi has relied on since the start of the Ukraine war. The comments come after Washington, D.C. signaled it could roll back extra tariffs on India as its Russian oil imports have fallen sharply. India stopped buying Venezuelan crude last year after U.S. sanctions, but Washington, D.C. has now eased some of its restrictions on Caracas. On Friday, Indian Prime Minister Narendra Modi said he spoke to Venezuela's acting president, Delcy Rodriguez, and the two agreed to deepen their partnership in all areas. Amitoj?
Well, thanks so much for that. We're going to have to see how, of course, the oil executives in India react to those developments. The Indian markets is a big focus today. Yesterday, it was an odd day. It was a Sunday. The budget was declared and the markets were open. And once the budget was, well, the announcement of the budget was about 1 hour in. There was one that was made that shook up the markets, and that was around a securities transaction tax on derivatives from 0.02% all the way to 0.05%. And this is what happened to the market. The market dropped 2.2%. It was the single biggest budget day fall since the last 6 budget days. And we will be looking at how the markets continue to react to all the developments as they filter into the sentiment and the perception in the next 40 minutes or so. At this point in time, the market not doing that well, down below that 25,000 mark at 24,825, GIFT Nifty indicating that it's going to be most likely a muted start. And let's just recap what happened in the budget. There was a lot of, there was not a lot actually in terms of expectations. There was a consideration around the capex that the government would spend, and that has turned out to be kind of positive at 12.2 trillion rupees when you had about 11 trillion rupees in the last budget, a 9% increase. Defense was a big part of the conversation, 15% increase in the defense budget. And we asked the question to Nirmala Sitharaman in the post-budget press conference, the finance minister telling us that yes, of course, global uncertainty had a role to play in that. The other push is the tech-heavy budget aspect that this is being seen as. It's seen as services-heavy, but also tech-heavy. Rare earth has been a big focus. There's dependency on China. What India has decided to go ahead and do is that on top of its push in November 2025, where it brought in a plan of $800 million, it's also decided to create a rare earth corridor for 4 states where these minerals can be found. Now, India has the 3rd largest rare earth minerals deposit in the world, but it only mines about 1% of what the world does. So that's the big focus. It wants to reduce its dependency. Additionally, we can also consider a couple of different factors around manufacturing. Manufacturing push was there. India is trying to focus on manufacturing when it is just around 15% and continuing to stay there in terms of its contribution to the GDP. India wants to push it up to 25%, but that's been very sluggish. This particular budget, once again, emphasizing that aspect. And I think another couple of developments that have come in, particularly when you think about, this tech-heavy budget aspect, which is that 400 billion rupees for electronics manufacturing. And when we talked about manufacturing, it wasn't just that there would be a push for manufacturing as one aspect. It was that it would be an indirect push towards manufacturing. That is, 7 sunrise sectors would be given a push, and that would have an indirect impact on the manufacturing aspect of the GDP. We look at this in the context of the manufacturing focus on these sectors: pharma, semiconductors, electronics, rare earth magnets, chemicals, containers, capital goods, textiles, sports goods. The big question, though, is what has this budget done to make sure that foreign funds come into India, both FDI and FPI? FPI is going out consistently, persistently, and FDI is also not very consistent, and perhaps a big problem, because at this point in time, in just this month, in January, 4 billion has gone out of India in foreign funds, when last year, in all the 12 months, it was 20 billion. And to talk about all of this and more is perhaps one of the most foremost experts. He's not just a man who's written 4 books on how the finance ministry works, how the government works, but he's written 3 books on just this budget, how it happens every single year. Subhash Garg is with us, former finance secretary, former past secretary, executive director of the World Bank. It's a pleasure to have you here with us in this cold. We can't see your former office.
Yes, a lot of fog.
There's a lot of fog or smog. Is it smog?
Fog. I would say.
You say it's fog.
To be charitable.
Okay. We think it's smog, but we could be wrong. We don't know. Behind this is where your office was for many years.
Used to be.
Of course, it's now in that direction where things happen. The parliament is there. Just give us a sense, your first reaction to this budget. Did it meet your expectations?
See, this budget was made under very severe stress on fiscal side. You would see this in the form of the expenditure increase. That's only about 5.5% over last year. Such small increase is very, very poor for India's sort of growth trajectory and the ambitions. Why was this? This was there was constraints all over. The tax. If you look at the numbers from last year's budget estimates for the next year's budget estimates, there is increase of only 1% in tax receipts. That is too low. That tells you that the government's tax receipts are just not growing. There's been some increase on the non-tax side, and the other constraint was coming from the government's decision to sort of cut the fiscal deficit down from 4.4% to 4.3%. That together, because that gives only 7.5% increase over last year. So on taxes side you have a problem, and on the borrowing side or the fiscal deficit also you constrained. That results into very heavy, sort of very low increase for the next year. So that was one major factor, I think, which the government had to be very pragmatic about, that you have very little fiscal space to expand expenditures. This is also, there is another major thing which I think has not been discussed so far, is that the government's ability to execute programs is coming under strain. Look at the allocations for one of the flag schemes called Jal Jeevan Mission, which is to provide water connection to everyone. The allocations have been reduced from 67,000 crore or 670 billion to only 117 billion. That is no expenditure. You look at the housing allocations for the PM housing scheme, both the rural areas as well as urban areas, there is a lot of downfall, a lot of reduction. The government had to increase the defense expenditure, so it increased in the revised estimate.
Did it have to increase it the amount it has?
Yes, it had to. In fact, there is one thing which has not been talked about. There is an expenditure of about $310 billion, which is not booked in the Defense Ministry's budget. It is booked into the Economic Affairs Ministry's budget.
Which is why there's this confusion around whether it's a 15% increase or an 18% increase, and when it comes to modernization, it's a 22% almost increase. Can you explain this?
Actually, the increase is, if you compare the last year, current year's budget to the next year's budget, and I'm talking only about the capital expenditure,
on
which
defense.
is what matters. Yeah, on defense. Defense. So there is a 20% increase on the Defense Ministry's capital budget. If you add 31,000 crores of the Department of Economic Affairs, which is in this year's budget, not the next year's budget, then it actually goes up further. So defense had to be increased. I think this is perhaps payment for some S-400, we don't know at this moment. We'll have to get into the details, but that is the payment which has been made through the Department of Economic Affairs. So you have those constraints that required larger defense budget. Despite that, the government has been, I think, prudent in the sense that you increase the capital budget for the next year. Remember, another thing which the government had to accommodate this year's budget, there's been big loss on the sovereign gold bonds which the government had issued and had agreed to pay for at the current market price, and the gold prices having gone up. So there is a 50,000 or 500 billion provision for only the losses on that front. So despite all these things, on account of probably the less of execution ability, the current year's budget is actually down by 40,000 crores.
This is, so you're saying that this is a good job in a sense?
It's a pragmatic job in the sense you have tax constraints, you have borrowing constraints, and that is why. So it's a pragmatic job. What perhaps the government has tried to do is what it cannot do by the real resources, it is trying to do by talking about it. So there is a lot of talking in the budget about this. There is an expression used by the finance minister that the government does reform in place of rhetoric. I would say that this is reform by rhetoric. So you talk a lot about doing so many things on technology, on universities, on cities, on capital expenditure, but you have no allocations to back them up. And these are very, very long term. So I would treat this giving the push to the market or trying to create a good sentiment by talking too much about so many investments and other things to say reform by rhetoric or postponing the hard choices in times to come.
It's also about messaging. You've admitted yourself that they had less fiscal room, so they've they can't obviously cover everything, but you've got to, in a budget, politically otherwise, you have to think about just sending that message across. You know this better than anyone.
So the budget is all about political messaging.
Yes. Okay. So in that context, because you brought this up, you had the former finance minister, P. Chidambaram, of the opposition.
Right.
And he said a couple of different things, and I want to quote him. He said, there were 10 challenges that were just not highlighted enough, that were not spoken about enough in this budget. And mainly, he talked about growing trade deficit with China, uncertain FDI, persistent FPI outflow. He said that these were unaddressed. Do you agree?
See, the art of budget making, especially the budget speech, which is what everyone hears, is you highlight what you think is great or can bring positive sentiments, and you just shun away. You just don't address those things which are either your Achilles heels or something where you have not done.
Like pollution, potentially
like pollution, for example.
The question was asked in the press conference, and there was not much said.
So there is a total silence on pollution, which is one of the biggest problems. There is total silence on employment. 2 years back, there was a big announcement on the ELIs, employment-linked schemes and all, internship, 1 crore internship and all. Those schemes have utterly failed. But you don't talk about it. So it's understandable that in the budget, you don't talk about something which is where you are
but
doing
foreign funds, just talk about that. For international investors, watch us. It's a big problem, right? The fact is that you had 20 billion of foreign funds outflow net last year. This year itself, in January, 4 billion already. That's like putting a lot of pressure on the rupee, on the bonds, on the entire market. What's your take? What could they have done that they have not done? When we asked this question in the press conference, they gave us some aspects of what they've done. We'll bring up those graphics so the viewers can see what they've actually done. But
I think one of the reasons foreign investors look at it, what is the growth potential and what is the growth happening? I'll give you 3 measures which I think different people look at the growth. One is the 7.4% growth which the government talks about, which is a real GDP growth and which is said to be one of the highest in the world. So that is one. The other one is if you look at the nominal GDP growth and adjust it to the right kind of inflation which is there. So 8% is the nominal GDP growth. If you adjust it by 3.5%, which is the real inflation, then the real GDP growth becomes 4.5%. That is what will upset a lot of people. Look at the third measure, which I think the foreigners look at. Is your nominal GDP growth adjusted for the dollar depreciation? That 6.5% dollar depreciation makes your dollar growth, GDP growth, only 1.5%, which is one of the lowest in the world. So if the foreigners are looking at the dollar GDP growth at 1.5%, it's quite understandable to me that they won't invest.
But could this budget have done anything for them?
See, again, for them, there are 2 ways you can address the foreigners. One is that you make sure that India grows well, and the other one is you give them concessions. I think the foreign investors might be looking for all the time that don't tax our dividends, don't tax our capital gains, etc. That is a very discriminatory treatment to the domestic ones. I wouldn't advise them to sort of do this. The foreign investors might have been disappointed that in this budget there is nothing on that front. Right? The other one is the real growth. That is where the government can do, but it's not a short-term solution. It has to be a very long-term, and that is where you need to take a lot of goods. Look at, for example, capital expenditure. Is this capital expenditure growth promoting or just like that? I've been saying this for many times now. The railways has a very large capital expenditure. Look at the growth contribution of the railway capex. That's very low. BSNL has been receiving a lot of equity support. What is the growth contribution of BSNL? So if your capital expenditure to the extent of 30-40% just is not contributing anything to the growth. So even capex, which the foreigners might be looking at, is that this is not contributing to the growth.
Fair enough. Okay. I want to ask you about the securities transaction tax, which has made headlines because the Nifty
Yes.
50 dropped 2.2%, biggest budget day fall. It doesn't have perhaps a larger impact on the economy, and it's a very minute aspect, these derivatives. So in the long run, should we be concerned about it, that this has been increased from 0.02% to 0.05%?
So there are two. What you are saying is on the futures, there is slightly lesser on the options premium,
Yes.
but derivatives have received a little bit of a stick. The securities transaction tax was expected to contribute significantly to this year's tax growth. Thanks to the much lower transactions in the markets, especially on the future side and all, that growth was coming to be much less. So probably the government thought that you can make up for the lesser number of transactions by taxing it higher. And maybe that's also a messaging that we don't actually value or want to encourage too much of the derivative side. So I think from that point of view, and considering that the government has a huge pressure on tax. As I said, only 1% increase in the tax estimates for the next year as compared to this year. So it had to do something. Thank goodness it didn't do any misadventures or adventures this time, like giving away too much of the tax, income tax reliefs or GST. I think the government has realized that you don't get too much of growth based on sacrifice of so much of revenue. So you do something. So I think that is fine. The markets should feel relieved that there was no increase on capital gains tax. So I think that's market. I think are more disappointed by the expenditure side also, and that there was no. They were expecting certain things on disinvestment that also did not come about. So on the whole, I can understand the market reaction, but I don't expect it to be too much long term. I think in the long term, this budget doesn't do harm. It doesn't do great service, but it doesn't do harm either.
They're playing the long game. No big bang budget, and we understand that. Okay, final question, and I want you to pack three things in it. The rupee, has the government decided, let it fall, it's okay, let it be the shock absorber. Number two, I want to understand from you this aspect where we are looking at this push towards AI and semiconductors and rare earths and defense and these corridors that are being built. Are they going to be, the implementation is the big concern. And the final thing, which perhaps you're the best expert on, shift from fiscal to debt to GDP. That particular aspect could potentially, for other governments, this government, I'm not sure, create a wiggle room which would impact welfareism positively, populism.
On the AI front, there is no increase in the budget. There is a paragraph talk about it, but there is no increase. So I think the government is trying to wait for the implementation of the scheme which was announced earlier, AI mission. You got a lot of GPUs for that. How is it behaving and all? On the question of this shift from the fiscal deficit to the debt, this is only semantics. This makes no difference. I think one shouldn't waste time on this kind of thing. The real thing is fiscal deficit, which contribute to the debt. So how do you deal with your fiscal deficit is the question. The rupee part, I think more than the government, I look at it how the Reserve Bank is managing it. We are taking two measures which are very clearly evident. Number one, we're shifting the dollar reserves to other currencies. So we are reducing dollar. Now, a country which deals with basically on dollars, shifting it is a market adverse.
I understand.
Second, last year it happened, the government was converting dollars into gold. The Reserve Bank. So that is not very happy for rupee. I think there would be a pressure.
Thank you so much, sir.
Thank
really
you.
appreciate you coming out here.
Thank you.
That was Subhash Garg, sir. We're going to take a short break. Be back with lots more.
Welcome back to Inside India. Well, India hosted a meeting with Arab foreign ministers on Saturday with senior officials from all 22 Arab League member states in attendance. This was the first such gathering after a decade-long hiatus, as New Delhi looks to deepen ties with the Middle East amid shifting geopolitical tides. This also just a week after India and the UAE set a target of $200 billion in annual trade by 2032. It also agreed to a strategic defense pact. Pakistan says it will boycott its T20 World Cup match against India in Colombo on February 15th, though it will play the rest of the tournament. The move would cost Pakistan 2 points in the tournament. The International Cricket Council has urged Islamabad to reconsider, saying the decision harms world cricket amid ongoing political tensions between the two rivals. We will be back with more analysis and commentary on the Indian budget in just a bit. Stay with us. You're watching Inside India. Welcome back to Inside India. We're back with a look at those oil prices, which are looking sharply lower, trading sharply lower in the Asian morning session. As you can see here, also WTI and Brent crude posting matching 4% intraday declines. We're watching the Forex space as well because we are looking at Dixie, the dollar recovering from that 4-year low it hit last week. Take a look at the dollar index now, just finding a little room to firm up at just over 97 on the index. That's come at the expense of the Japanese yen, also weakening so far, but the euro dollar actually holding its own and strengthening a bit. Mind you also with that dollar index, whenever the dollar strengthens, it tends to weigh a little bit on commodities, which might also be contributing to that overall downward or risk-off sentiment we're seeing for crude futures, as we showed earlier on. The dollar is firming up, though, after President Trump announced his pick for Federal Reserve Chair. He's nominated former Federal Reserve Governor Kevin Warsh to lead the U.S. Central Bank when Jerome Powell's term ends later in May. Warsh supports lower interest rates and wants a major overhaul of the Federal Reserve. The pick must be approved by the Senate, where lawmakers remain divided on concerns over political pressure and central bank independence. Republican Senator Tom Tillis says he will block any Fed nominee until a Justice Department probe into Powell is resolved. But President Trump is confident of his Fed pick. Here's what he said about why he chose Mr. Warsh on Saturday.
So I think he may get Democrat votes. I think he's so good then he'll probably get Democrat votes. He should. It's very good. My choice, my Fed choice. He should get Democrat votes.
Do you have a sense of what he's going to do as far as interest rates are concerned?
I hope he's going to lower them. I mean, if you watch him on television, because I watch interviews and statements, I hope he's going to lower them. But he's going to have to do what he wants to do.
And all of Donald Trump's comments will continue to filter into the sentiment here in India. We're, of course, counting down to the market open. Well, in India, this is how we're shaping up. GIFT Nifty indicating a bit of a flat start. The rupee also looking down versus the US dollar. On Friday, the rupee touched 92, came back down just towards the end of 91, closer to 92. And today, again, the focus is going to be on the rupee. Remember, yesterday was, after budget day, the sixth worst budget day, a 2.2% drop in the market. So we're going to have to continue to see how that plays out later today. India's National Stock Exchange also clearing a major hurdle toward going public after the market regulator approved its very long-awaited initial public offering. The NSE says the green light marks a new chapter for the exchange, even as it continues to settle a long-running dispute with SEBI over unequal access to trading systems. And the regulator's approval is conditional on full disclosure of pending litigation, and the exchange is now expected to file its draft prospectus by the end of March. With more than 177,000 shareholders, the NSE is India's largest unlisted company, and its IPO is set to be one of the most closely watched listings in years. There were a bunch of announcements in the budget regarding foreign companies in India. First, the government is allowing foreign firms to supply expensive machinery to their Indian contract manufacturers for up to 5 years without triggering income taxes, removing what Apple had called a deal-breaking risk. Second, foreign companies using data centers in the country will not face any taxes on the worldwide income until all the way till 2047, which is when India wants to be completely developed. The move is expected to boost investment as companies like Google, Microsoft, Amazon are already pouring millions, or rather billions, into Indian data infrastructures. Here's some of what the country's revenue secretary told us during the press conference when we asked about easing norms for foreign investors and firms.
So the arrangement we have done is, just because that entity will set up data service centers and will use this as one of the many to provide services globally, should not become a cause of uncertainty for it that its global income will get taxed here. So that is the certainty which we are giving to it. Quite naturally, the data service center, which is located in India, will be taxed depending on the way it is positioned. And that entity will be selling its services to customers in India through a reseller entity, which again gets taxed. What we are excluding from taxation is this global entity, which is essentially doing cloud-based services, using data services centers across. And we do not want it to be deterred from enhancing its business footprint in India to provide such global services.
Well, joining us now from LA is Philip Wool. He's the head of research at Reliant Global Advisors, and JP Yong will be with me through this interview. Philip, I want to start by thanking you that you've come. Thank you so much for taking the time and, of course, giving us the perspective of a global investor after India's budget. I want to just start by understanding, after this budget, what about India, if anything, makes it more attractive than other emerging markets, other markets in this side of the world?
Well, it's great to be here, so thanks for having me. Yeah, as you mentioned, I come at this from the perspective of a foreign investor in India, so I manage an emerging markets portfolio, and I have to say that among the emerging markets, India was a disappointment last year. It returned about 5% in US dollar terms versus the rest of emerging markets up about 34% in 2025. India is down year to date. And so I think investors offshore were looking at this budget as a potential catalyst for a re-rating of India's market. And I would say that investors, based on the initial reaction, are disappointed that maybe the budget didn't do enough. And so I don't think the budget is going to solve the problem, but there are other catalysts that we could look at, that might change the minds of foreign investors who have been kind of pulling money out of India.
I'd love you to elaborate on those other catalysts. There was another aspect. The securities transaction tax, resulted in the Nifty 50, the market in India, dropping about 2.2%. Immediate reaction to that development on derivatives, this tax. At the same time, when you club it, and I was talking to other foreign investors into India who manage these kind of funds, and they said when you club it with the Tiger Global judgment of the Supreme Court of India, it sends a very negative message in total to foreign investors. What's your take?
Yeah, so I think this transaction tax is really about curbing undue speculation in India's market. So I'm not reading too much into the negative reaction there. India's market is one that is heavily dominated by retail investors, and that's one of the things that foreign institutions like about India's market. They think they might be able to identify mispricings in India and trade actively to generate alpha there. I really think ultimately it's trade that is the big macro headwind to India's growth. And so, you can look at the budget and kind of parse where there are pros and cons. But I think ultimately, until trade with the U.S. is resolved, that is going to be an obstacle to sort of reversing negative sentiment toward India.
I'm glad you asked that, because before I hand over to JP, that was my final question. I did want to ask, in terms of sentiment, in terms of perception, because when you think about the 50% tariffs imposed by the US on India, it hasn't had much of an impact on the ground in the short or medium term as of now. In the long term, perhaps that'll change. But it's had a bigger impact when it comes to perception. So in that context, I wanted to understand from you, has this budget done anything in terms of perception to offset that 50% tariff perception damage? And at the same time, how does all of this really change this budget also? How does it change the way you are playing India?
Yeah, so in terms of perception, you're right. It's mostly the negative sentiment associated with tariffs because, of course, a year ago, everyone was looking at friendshoring. That was the narrative, and India was supposed to be a beneficiary of Trump's trade war, and we've seen how things have developed since then. So I think it really is that negative sentiment. The budget has some measures on, increasing India's supply chain robustness and trying to attract foreign investment to India in areas that might be resilient to tariffs. But I think those are more longer term sorts of measures. That's not going to have an immediate effect. When I think about India's market, where's the opportunity? It is that eventually I do believe a trade deal is going to happen. So I would try to position, and in terms of how we're playing India, try to position in sectors that are more exposed to that tariff risk. And then when that revaluation comes, I think investors might catch more of it.
Philip, JP here. Whenever we talk about emerging markets on this side of the world, whether it be India or Indonesia, we always have to keep one eye on what's happening in global markets and arguably one of the biggest determinants where U.S. markets are actually going. We've seen signs of market confidence and market sentiment starting to crack based on what's the wobbliness, if I can call it that, out on Wall Street, the decline in some of those safe haven assets in recent times, and also questions about valuations. Do you think that if we start to see a sell-off, orderly or not, in the United States, this could also impact India to a certain degree, and by how much?
So it depends on what triggers that sell-off. Typically, when you think about the sort of risk that propagates from the U.S. to emerging markets, it's recession risk. If there's a slowdown in global growth, of course, that's going to hit emerging markets, including India. I think one of the themes in the U.S. is, are we in an AI bubble? And one of the reasons that India has lagged over the last year is that India just doesn't have a lot of exposure to the AI theme. And so if U.S. stocks sell off because investors have started to become more skeptical of this AI revolution and the earnings growth that that's going to generate, that might actually spare India relative to markets like Taiwan and South Korea that have run up more within that AI theme.
But is the bigger recession risk for the markets not so much AI being a bubble, but perhaps signs that the U.S. consumer might be slowing down? You know, we have seen consumer confidence in the third quarter indicate that it's still robust. But on the ground, and I'm sure you also might be hearing this or seeing this when you're out and about in LA as well, that there are some anecdotes that people are cutting back on spending, perhaps not feeling as confident about that. And I ask that because if the U.S. consumer does start to falter, I see that might be the bigger crack that the global markets will have to worry about when it comes to where the U.S. economy goes. What are your thoughts on that? And is that a legitimate concern that we on this side of the world should worry about?
Sure. I think that's been one of the surprises in this U.S. economy is that the American consumer has remained so resilient through inflation, through a softening labor market. Now, I think the fact that the consumer started in a really strong place after the pandemic, that helps. And I also consider that the Fed has a lot of room to cut rates if indeed the U.S. economy starts to roll over. And so I'm not so concerned about a deep recession that's going to ripple out into emerging markets, but it is something to watch for. I think we can also look at U.S. inflation and the degree to which higher than desired inflation leads the Fed to take a slower path to rate cuts. Of course, a stronger U.S. dollar, less easing would also have a negative impact on emerging markets at the margin.
Yeah, and just quickly, Philip, I want to get your thoughts on the nominee for the next Federal Reserve Chair, Kevin Warsh. We're hearing mixed things, right? On one hand, that he's prudent and actually has a tinge of hawkishness behind him. He also wants to overhaul the Federal Reserve. There's a lot to deal with. What do you think what do you think is important, and what are some of the discussions you're having with fellow investors in the U.S. about what Kevin Warsh, as a possible Fed chair, what it might mean actually for markets there and globally as well?
Yeah, so in terms of a reaction, there are really two responses that I've heard when I speak with other investors about this. One is this is a very credible pick. So if investors had concerns that, the Fed would become too political or that, there would be some sort of loss of independence, I think Warsh is a very qualified candidate. He would allay those concerns. The other concern is that he is hawkish, this notion that he's opposed to quantitative easing. He's talked a lot about fighting inflation in the past. I think until he assumes the role, we won't really know what sort of bias that he has. And the other thing to consider is he's one of 12 voting members of the committee. If you look at the rest of the FOMC, this is not a group of super doves. So his influence, shouldn't be overstated, I think, in the scheme of things.
The head scratcher, though, there, Philip, is is a not so dovish Fed chair going to be something that President Trump will tolerate. But we'll have to table that for another time when we can have you back on the show. Philip Wolf from Rayland Global Advisors, thank you so much for joining us all the way from Los Angeles there and for giving us the outside perspective on what the budget in India will mean for their markets and all the other global issues that might actually impact it for better or worse in the coming months. Indian markets are coming online soon, but we'll take a closer look also at how they open after this short break. We're back in 2 minutes. Welcome back. 100 seconds since Indian markets came online, and the Nifty 50 is doing exactly what those futures were foreshadowing. A softening for the Mumbai benchmark and just a tad bit in the red, down by about 0.2%. Take a look at the rupee, though, also weakening intraday to about 91.72 against that dollar index. That's looking firmer than most days. We take a look now at how some of these stocks that saw an impact from the hike on securities transaction tax, or STT, announced on the budget on Sunday, and how they're doing. These are the brokerages and the major ones out in India, with the firm seeing a big decline on the special session, as the finance minister mentioned that the raised the STT, that is, to about 0.5% from 0.2% on derivatives. It's also in a bid to curtail speculative activity and volumes in the futures and options markets. A bit split. It's mostly down with only Nuvama Wealth actually trading in the green, up by about 1.7%. But most markets, most offers, including Billion Brains Garage, down by 2.6%. This is to curtail speculative activity and volumes on the futures and options market we mentioned. Brokerage Jefferies is now expecting a 5% decline in average daily turnover for BSE, and a similar drop in orders for the stockbroker Grow after this hike. The STT hike rattled broader markets as well. And we also take a look at, you can see also just something that the markets are taking note of as the session in Mumbai progresses for investors, both domestic and international. Let's get back to Amitosh Singh, who's in New Delhi now, who's also standing by with yet another special guest. Amitosh, take it away.
Thanks so much for that, JP. The market's opening down. That was expected. We've, of course, had a couple of different things that we asked the finance minister not too far away from here. Remember, the old finance ministry is right behind us. You can't see it. Or can you? No. Well, you can start to see it. It's the fog or the smog, the way you look at it. Question was there on pollution also posed to the finance minister. Not much was said. She passed that on. We have with us a very, very special guest right now. Karan Marwa is with us, and he's going to give us a sense of what the markets are going to do. A partner, CFO Advisory Services with Grant Thornton, Bharat. Thanks so much for that, Karan, for braving the cold and coming out here. I want to start with what the market has just done. The STT yesterday resulting in the biggest budget day fall in the last 6 years, 2.2%, continuing to fall. Is this justified? Should it be something that we should be worried about? This is, of course, on derivatives.
No, thank you. Good morning, and thanks for having me here. I think what's happening in the markets is kind of expected. It's a reaction to the hike in the securities transaction tax that happened yesterday. I think that in itself is a sensible move to curb speculative trading. There is a lot of money that's chasing Indian equities, and the kind of instruments that the government wants to promote. So it's a step in the right direction. But if you take that away, I think there's lots of very positive steps that have been taken to promote inflows into the Indian markets. And hopefully the market recognizes some of them today as we go through the detail. And I hope this comes back.
Yeah, but there was one trader who said trading is speculative.
Well, correct, but I think it's about look, you can do it in multiple ways. I think you have to look at our demographics. You have to look at the volume of money that's chasing equities from the SIP inflows from mutual funds, right? And these are investors who are largely retail, who may or may not have the sophistication to even understand some of the instruments that we're talking about here. So another way to do this is to put some entry sort of filters in terms of what the levels of investment that you need to make, or the deposits that one needs to make to ensure that the right investors are looking at these instruments rather than them being for everyone.
Okay. Any view on what this budget has meant, net view? There is a lot for foreign investors. There have been a number of reforms that have been coming in.
Yeah.
There's a little bit for foreign investors this time around. But is it enough to turn things around when $4 billion have already gone outside of the country in just this month, when $20 billion went last year?
Well, look where we are. Not today, but where the world is today, right? And the economic survey, I think, called it out very well. They painted 3 different scenarios, from the best case to the worst case. In that context, I think the budget is a very, very confident and coherent reassertion of our policy priorities. I would compliment the finance minister for doing what she's done. I think it's a very strong sort of statement that we are on our way to being Viksit Bharat. And the measures that she's announced will go in that direction.
Some
But
analysts,
it's not short term. It is a budget for 2047. It's not a budget for this year or for the next 3 years. And I think that's the context that one needs to look at. To get back to your question on foreign investors, I think there are positives. Look at the policy measures on data centers as one example. You're saying you'll
no
give
tax till 2047.
no tax till 2047. Gift City, they've extended the tax holiday. They've allowed foreign residents to invest in Indian equities directly. That's a first. The limits of how much that investment can go up to have been increased. There are several other measures which are calling out for equity infusion in the markets. And again, we'll have to see how it unravels.
Okay, since you're a CFO, one of the...
No, I'm not a CFO.
I mean...
I advise CFOs.
You advise CFOs, that's what I meant. You advise CFOs, you go into the boardrooms and you talk to them.
Yeah.
In that context, I want to understand from you, what would you tell them about the budget? And because the question that they're going to ask is, wait, hey, is private capital going to invest in India even if public capex is quite good?
Well, I think that's been a big call out for several years, right? The desire to have more private capital investment in tandem or in step with the government's capex. What would I tell CFOs? What do I go and tell boards? I think the timing is right. There are several sectors that the government is promoting. Some new age. A lot of them are new age. Take semiconductors, take electronic components, take defense. I think that did not even get announced in the budget speech, but that's a big increase in outlay. Versus some traditional ones too, right? Given the kind of economy we are, textiles, tourism, fisheries. So that's one aspect, right? That there's lots that you can look at to make sensible investments. I think the second big one is the focus on ease of doing business. Look at how they've gone and decriminalized a lot of tax offenses. Even changing the nomenclature of calling what was a penalty to a fee. That's a signal, right, that we are not adversarial. This is a country that loves its domestic sort of capital, and we'll find ways to make it more easier for them to do business in India.
Okay, I guess my final question for you is that does this budget, guarantee is a strong word, but let's use it, guarantee that the manufacturing share of GDP will increase?
Well, there are no guarantees in life, as you know, but I think it's called out the right sectors. It's called out the right measures. Combine that with some of the duty incentives that they've announced on customs and so if you put all of that together, I think it does allow for companies to now start making that investment or at least looking at that. And I'm optimistic. I think it will open up doors.
Okay. Well, I really appreciate you coming and braving the cold with us. Thanks so much, Karan.
No, thanks for having me here.
Thank you. Thank you so much. All right. Well, that was Karan Marwa from Grant Thornton, Bharat. That's all the time we have today from New Delhi on Inside India. I'm Amitoj Singh from the entire team. Thanks so much for watching.
And I'm JP Ong here in Singapore. Thanks for your company today. But do keep watching CNBC because Access Middle East is up next. Have a good morning.